Let's take a look at this question. A company can report basic EPS, but do not have to report diluted EPS. So we have two EPS. We have basic and we have diluted. And you have to know the rules. When do we have to report only basic and when do we have to report diluted? Simply put, if we have a simple capital structure, we only report basic. If we have a complex capital structure, we have to report both basic and diluted. You always have to report basic. So when do you have a complex capital structure? You have complex capital structure when you have any dilutive securities. So we're just dilutive securities. What are dilutive securities? So we're just using words that we're not defining. Dilutive securities, it means securities that could potentially increase your common stock. So what could increase your common stock? What are some potential that could increase your common stocks? If you have options, if you have stock options, it means if they are exercised, they could increase your common stock. If you have any sort of convertible securities, like a preferred stock that's convertible into common, convertible bond that's convertible into common, those will give you complex capital structure, which in turn will require you to compute diluted earnings per share. But the question is, would a company can report basic but don't have to report diluted? If they don't have to report diluted, it means they don't have dilutive securities. Let's take a look at one. Common stock outstanding, that's not dilutive. No preferred stock. Even if we have preferred stock, as long as it's not convertible, so far so good. So common stock and preferred, we can stick with basic so far. And options that are convertible. Hold on a second. Once we have options that are convertible into common stock, we move into a complex capital structure. So here we have to report diluted. Therefore, one cannot be an answer. If one cannot be an answer, we could eliminate A, we could eliminate C. All what we have to know now, whatever 2 is a correct answer or not a correct answer. Okay? Common stock, basic. No preferred stock, that's fine. Basic. Bonds that are convertible into common stock, I'm sorry, if the bonds are convertible, we moved into dilutive, so we have to compute the dilutive. Therefore, 2 is not a correct answer. Therefore, neither 1 nor 2 is the answer. So this company, they'll have to report basic and diluted. They cannot only report basic. Why? Because they have dilutive securities. What are the dilutive securities? Well, let me highlight them in yellow. Options, convertible bonds, because they have those dilutive securities. Guess what? They have to report diluted earnings per share.
Want to see more CPA exam multiple choice questions solved step by step? At farhatlectures.com, you will get hundreds of video solved MCQs step by step, including previously released AI CPA questions, previously released AI CPA simulation, in-depth lectures and resources to prepare for the CPA exam, AI tools that's going to help you study smarter, not harder, CPA exam podcast lessons where you can learn on the go. And also you will get the personal guidance of support of Farhat and his team. If you are serious about passing the CPA exam, this is your next step. Visit the website, farhatlectures.com, start your free trial, and I hope to see you on the website.